Good morning, everybody, and welcome to this week's Elite Traders Club weekly analysis session for Monday, the 3rd of August 2015. Hope you've all had an enjoyable weekend and that your sporting teams won. Mine didn't, but it was about time that the Hawks had a loss. Quick reminder before we get underway, the Elite Traders Club Academy coming up towards the end of August, 28th through to the 2nd of September. We've still got a few places left in that if you'd like to come along. You'll be receiving some information about that in your inboxes either today or tomorrow with some video content as well, so keep an eye out for that. Certainly looking forward to it. Great venue, as I've said, really good topics, not just for beginners but for intermediate and developing traders. Our disclaimer for today: the content of this presentation or any other Elite Traders Club material does not constitute a recommendation, nor does it take into account your investment objectives, financial situation, nor particular needs. So before making an investing decision based on the general advice presented in any of our presentations, please consider whether the advice is appropriate in light of your financial circumstances. All right, today, as per usual, portfolio management. We'll go through and see what's happened on the market in terms of market risk. There has been some changes in both portfolios, some specific setups and some Q&A. As mentioned, the benchmarking model at this point in time has the Australian market. We've actually just, despite last week's price action moving in an upwards direction, because the benchmark indicator, the stochastic that we use, it's a lagging indicator, remember. Everything is lagging other than price action. It has currently just dipped down into very high risk. So as such, that means that you need to apply a 20% market risk multiplier to your maximum value at risk, which for most of us is around 15%. In the US market, again, the market over there has moved from low risk back down into moderate risk for the time being, and as such that means that we need to apply an 80% market risk multiplier to our maximum value at risk. So assuming that we are splitting our portfolios and you had a 15% allowable drawdown, that would mean that you were allowed to have 7.5% of that allocated to US stocks and 7.5% allocated to Australian stocks. So on that Australian portion of the portfolio, because we are in very high risk, it means we use a 20% market risk multiplier. 20% based on that 7.5% maximum allowable drawdown means that you are currently allowed to have a 1.5% value at risk on your Aussie portfolio. That is, if you're splitting it between the two markets. Conversely, in the US, of the 7.5% that you're allowed to have there under a full drawdown arrangement, because we are in a moderate market risk, we have to apply an 80% market risk multiplier. So 80% of that 7.5% means that you're allowed to have 6.5% total value at risk. Obviously, if the US is your primary market and you're only trading the US, then you apply 80% of your 15%, and that would have you at a 12% maximum allowable drawdown. Conversely, if we just go back up into do the same exercise for the ASX, if you are solely trading the Australian market and you had 15% as your maximum allowable drawdown, then applying a market risk multiplier of 20%, 20% of that 15% would have you at 3% maximum allowable value at risk. If that doesn't make sense and you're still struggling with that concept, don't forget to request a coaching call and one of the ETC coaches will touch base and explain that for you. If you're choosing to do any scaling out along the way, because we are in a very high market risk mode in the Australian market, it means that you're looking to get out at targets of 1-to-1. If you're choosing to scale out and you're trading the US, then we are looking for 2-to-1 type scale out risk reward opportunities. Alright, just a quick recap from last week before we go in and hit the markets and have a little bit of a look. The education session last week was postponed in lieu of the ETF-based strategy. So there will be an education session this week on Wednesday. recording of the Elite Funds Maximiser, which is the ETF-based strategy, was performed during the live event. We had good attendance at the live event, and that recording will be made available earlier today, and we'll send out an email with a link to that recording, and you'll be able to sit back, watch that. We had a good Q&A session with it as well, so lots of questions that you might have yourself hopefully will be answered through that. If not, certainly get in touch with us and we'll be happy to answer any questions that you may have. And that Elite Funds Maximiser, as you log in to the Elite Wealth website, those of you on the Elite Traders Club will have complimentary access to the Elite Funds Maximiser, and you will actually see a new page. So you'll not only see the ETC page, but also if you are on the Elite Investors Club, you'll see that tab, and you'll all see the Elite Funds Maximiser tab as well as soon as that goes live. So just a couple of little things just to tie up there, but that should be live this afternoon. All right, let's go in and have a look at the markets now. And firstly, our market risk, as we always do, first thing of a Monday morning. See what's happened on the market and check out the current level of risk. You'll see there that, I've got fairly clearly shown on the chart there that the ASX has been predominantly in a downward channel type of move, just recently breaking out of that channel to the upside, and just recently last week retesting the lower boundaries of that downtrend line there. So looking like there's a reasonable point of supply down here, some nice price action, and again, it's strange, isn't it? We've had those 5 up days in a row, and yet our stochastic still managed to dip down into the very high risk levels. Hopefully this week, if we can get a close back up towards the 5,700, 5,750 level, I think that would be a very good sign for our market. So we'll just have to wait and see whether that pans out. But obviously the main thing is to continue managing your trades as you have been in the past. Again, using the 3 ATR, we're giving them the best potential opportunity to survive, and that's proved quite beneficial on a number of stocks where traditionally we would have been stopped out by now using a much more aggressive trailing stop procedure. So it certainly does have its benefits with stocks that you're picking that have good relative strength. Not to say that you're still not going to get stopped out, because there have been a couple of stop outs in the portfolios over the last few weeks. That's just part and parcel of being in the markets. The S&P 1500, wrong way, David. Let's go up a level. Again, reasonable price action last week, moving in an upwards direction other than the Friday session, but still stochastic, lagging indicator, dipping down into the moderate risk zone at that point in time. So we've talked about the change in market risk multiplier there. Again, a lot of the stocks in the US portfolio holding up generally pretty well, and quite a number of stocks in the portfolios that we've had trailing stops on, and we'll go through and discuss those in a moment. I ran my scans over the weekend, a few different permutations and combinations to see if I could find anything on the Australian market. I couldn't, long story short. Went through, had a look at everything, and what appears to be happening on a lot of charts is that they've been forming short-term downtrends, but we just haven't quite got the turnaround in that short-term downtrend back into short-term uptrend, so that we've got all three trends in alignment. So what I might do now is just hand it over to you guys just for the Australian market. If any of you manage to find anything in the Australian market, and then what we'll do is we'll go through and have a look at a couple of setups I managed to find in the US. So if you've got anything there in the Australian market that looks interesting, a potential setup, certainly type away and let me know. The actual scan results from the weekend, I think I ran about 3 different scans on the Australian market to see if I could find anything, to see if there were any holes that could be plugged, etc. But certainly couldn't find anything that was sufficient the actual number of scan results was pretty low as well. So not surprising that there's no setups there. So what we might do in that particular instance, we'll go across to the US and have a little bit of a look there, and then what we might do is do a little bit of a portfolio recap and have a look at some of the stocks that have been stopped out. There's a few stocks as well that have had soft stops that have been breached, that have had to be converted into hard stops. So we'll go through and again have a look at the process for that. So in the US, again, ran a number of scans, and I could really only find two that met all our criteria and still satisfied the price action model. And the first one of these was Omnicare on the screen there, OCR. So if we just scroll out on this one, other way, David, there we go. Scrolling out, and again, all-time highs on this one. So certainly nothing in the way of the price action. So we just need to zoom in and have a little bit of a look at this one. It has formed a trough. It's certainly had a very strong movement more in the last couple of months. Retracement, very tepid retracement really. Just coming down a little bit by a little bit each week, and again just moving up bit by bit as the last few weeks has gone as well. So a little bit cautious about this one. The price action, perhaps, the volatility, for whatever reason, all these candles, they're not very big bodies in comparison to previous history. It has certainly put in a higher medium-term trough, and it's been like that for a couple of weeks. So I'm not too sure why I haven't seen this one previously. Possibly because the candles were all very close together and I might have just skipped over it. Needless to say, it does represent a new opportunity. So the setup for this one, we want to be a couple of pips above the high of our last medium-term peak. The last medium-term peak there, and my annotation is right in the way. The last medium-term peak there, the high was at 96.54, and you'll see over here that we've just passed 96.54. We're actually up at $97 as we speak. So what we need to do, just to make sure that this is still a valid trade, is make sure that our entry level is still less than 1% above our medium-term peak. And it is. The limit there, 1% above our medium-term peak, is $97.50. The current price is at $97. So if we place an entry order on stop at $97.02 with a limit to $97.50, that still meets the bill, ticks all the boxes, price action, good relative strength, and we have a protective stop, remembering at least 2 ATRs away and at least 0.5% below that most recent medium-term trough, has a protective stop there at $92.02. That's OCR. The other one on the list that I managed to find was AVG Technologies. Again, if we just zoom out and have a bit of a look where it's been, not a long history on this one. The stock's been on the market for a couple of years. And in this particular scenario, it actually looks quite good in terms of technical aspects. It's had a period of sideways movements here where on a number of occasions we've come up and tested the ceiling. We've bounced off a floor on several points, so certainly significant old points of supply acting as future points of demand along the way. The clue for us that this stock was potentially going to move was a series of successive higher troughs, and more recently testing this old long-term peak, breaking through, coming back and retesting. So price action on that is looking really quite sound. Let's just zoom in and have a little bit closer look. Obviously the last trough that has formed well above the second from last peak. I'll just move my value line out of the way there. So exhibiting nice strong price action. As such, we just need to place an on-stop order 2 pips above the last medium-term peak. So on the basis of that, we have, and let's just have a look at that just again to illustrate the point. The high there, 29.09. The last one there, 29.05, but that second last candle is 29.15. So that second last candle has already moved beyond that last medium-term peak. It's still a valid trade because remember we are still able to enter the trade as long as we haven't moved more than 1% past that last medium-term peak. So the highest point, because our medium-term peak has already been breached, the medium-term peak was at 29.09. The highest point since then is 29.15. Last week we only got up to 29.05. So as long as we pass the high of that second last candle, the high of that second last candle is 29.15 that you can see there. So 2 pips above that. And we have an on-stop order at $29.17 with a limit to $29.38, and we have a protective stop at least 2 ATRs below that level and 0.5% below that last medium term trough. Has a protective stop at $26.29. That's AVG. Alright, so I'll hand it over to the audience to see whether you've managed to find any setups in the US for this particular week. There was a lot of, again, a lot of searches trying to find relevant setups. Kim says he didn't find any in the US. But one of the things I did notice with the lists that did come up was that a lot of them certainly had retracements, short-term retracements, but probably not just enough follow-through for the week to put in a higher candle where we started to get, new troughs being confirmed. So I'd suspect that if this following week we get a reasonable sort of week, that we might end up with a number of setups subsequently as a result of that. So it's just going to be a matter of biding our time and waiting. Again, given what's been going on with the markets, sometimes the feedback that you get from your scans, not just the number of hits from your scans, but that's one indication as to what's going on in the market. But also, once you're going through that, if you're really struggling to find anything, then it's just a message for us to listen to the market and not be too aggressive. And keeping in mind, we're in the US, we are still in moderate risk, so certainly opportunity to have a portfolio that's reasonably full. So yeah, let's just bide our time, see what happens over the course of the week, and with a bit of luck there might be some new setups for those of you that need to add any more into your US exposure. What we might do now is just go through and we'll have a look at the Australian market first and just go through the existing portfolio and just have a little bit of a look at how things are holding up at this point in time. So we had a setup in CZZ, and hopefully some of you managed to get into this one. This is a stock that Jeff Saffer was really keen on a number of years ago from a fundamental point of view. And again, you can see the relative strength on this holding up really, really well despite our market being in very high risk. And that's a really good sign. It's what you're looking for, and that's what the scans are really, really good at doing. So certainly sticking to your guns and really just looking for the best setups that you can, giving them plenty of room along the way, and just being patient. You'll see quite clearly with CZZ, obviously good relative strength, and really last 4 candles just looking really, really good, and as a result dragging that 3 ATR line way up now, well above the initial entry point. So we're giving it lots of room. The chances of this thing coming down and stopping us out and having a loss now is really pretty remote. And again, remembering the exit rules, when we get a close below the trailing 3 ATR, it's a market exit the following Monday. Or alternatively, if you want to use the 3 ATR as a hard exit because you don't like using soft stops, you can also choose that exit mode as well. That's CZZ. Travelling along really, really nicely. IHK, which is the Hong Kong ETF based on the local market here. A few weeks ago, we did have the candle come down and breach its initial soft stop, which is the bold red line, and as such we had to convert that into a hard stop, which is the fine red line there at the moment. Since then, price has moved up a little bit, still holding up reasonably well. It'd be nice to see some follow through this week, because I think if we get a nice strong candle this week, then that'll drag that trailing 3 ATR up above our initial entry, which will be a positive sign for it as well. Other ones in the portfolio. This is one that's been in there for quite a while, Auckland International Airport, and again, just last week, just dragging that 3 ATR up again. And this has been a stock that's just continued to do very, very well. I think I referred to this one last week, that it looks like even back through here that we may have been stopped out just using the 3 ATR line there. But it candle closed at 332. Our 3 ATR was at 331.7. So did it close below it? No, it didn't. So all the movement from a long period ago, we're still in it, and that's again the sort of movement, sort of patience that's going to reward you as longer term traders or investors by being in that. ARB, nice week last week. Not quite enough upward movement yet to drag that 3 ATR line up, but not too far away from it. Boral, again, the 3 ATR really doing us a favour. I mean, even down at this level, price didn't close below the 3 ATR. Previously, if we think about it, we would have rammed, crammed and jammed if we had the formation of a lower peak. So whilst this peak was lower than the previous peak, we didn't know that this was a peak until we had a confirmed short-term downtrend, which was this candle here, these other two candles being inside candles. So this was a candle that would have confirmed we had the formation of a lower peak. And good old Beyond Charts has given me the circle of death there, so I can't move my... Oh, there we go. I can move my pointer now. So we wouldn't have been able to ram, cram and jam previously based on that price action, because by the time we ram, crammed and jammed, this candle would have taken us out. However, since then we've had a succession of lower peaks, and by virtue of that, once we had the formation of this lower peak, we would have certainly squeezed our trailing stops up previously, and I think we would have been stopped out on that. So using the 3 ATR trailing stop method, it certainly gives it ample room to have its retracement, and this is a thing that's frustrated a lot of people before, that no sooner do we get stopped out and things turn around and move to the upward side, and this has certainly done that, and now so much so that it's now dragging that 3 ATR up as well. So again, just being patient, giving the trade plenty of opportunity to move up. BWP, again, nice candle last week. That trailed stop now moving higher. GHC hasn't really done much of the last few months. We've since been triggering, which is our blue line exit there. It's just sort of hanging around. Last few candles at least moving in the upwards direction. Still showing good relative strength and starting to increase as well. So a good sign for GHC. GOZ, still the initial stop there. Slowly the 3 ATR line is coming up. Another positive week higher, close above these previous peaks, and that'll drag that 3 ATR line up higher as well. Just being patient for the time being. IVE, this is the European ETF based on the European markets. I think it might have a little bit of Asia and a little bit of North Africa in it. It's a bit of a bits and pieces ETF, that one there. But price action moving up pretty strongly. Little retracement, fairly bullish candle there. Again, dragging the 3 ATR up in the right direction. James Hardie, again, just continues to move along in the right direction. Still really good relative strength. And again, our market's in very high risk mode, and a number of these stocks are performing well. One that got stopped out this week was REH. We've been in that one for a little while. Not particularly good relative strength through early parts of the year. A little bit up and down, even on the medium-term basis. We got triggered in. a while ago. It really, gave the stock every opportunity to do what it was supposed to do, but as a result has, moved down below its trailing 3 ATR. So this is something that we, need to respect as well, and that's a market exit on that one. We had Select Harvest again going really, really nicely. Hopefully some of you have got this stock. And again, just continues to go up and up and up, and fantastic relative strength. And from a previous entry of around $8, protective stop up at around $11. Closing price is above 13. That's a really significant profit on that along the way. So hopefully you've got some of that in your portfolio. Horizon Holdings, again, we got triggered into that a few weeks ago. Dilly-dallying a little bit. Relative strength, still outperforming the market. A little bit of recent weakness, but hopefully we get a bit more follow through this current week to take a little bit of value at risk out of that one. That's Horizon again. That Beyond Charts has gone a bit skew with. AHD, in this particular example, just a little bit sideways at this point in time. Still good relative strength, so holding up despite what the market's doing. And if our market does get a little bit of a boost over the course of the next few weeks, then I'd expect this to move higher as a result. APE, previously there was another setup here, and that's why you'll see there that little note, order cancelled due to poor price action, which was through here where we were looking to trade this breakout. We didn't get any upward movement beyond that last medium-term peak. We then had the formation of a short-term downtrend, which meant that this last peak was lower than the previous one, representing poor price action. So we had to cancel that order, and Murphy's Law that it's turned around, become quite strong, and would have triggered and moved to the upside. So that was the most recent order. There is an order prior to that, which is already in the watch list, and you'll see that the trailing stop on that one has already moved up this last week as well, up to 866, and that's in the updated watch list as well for the pre-existing position. PME, this was last week's, so this was one that I think Darren may have picked up from WA over there. I think that was the one we were looking at. It gapped up, and it actually opened right on our open level. So the open there was 241, and we had an on-stop order at 241. So triggered in right on that particular level. So that was must have been the previous week, because there's a little candle in there. So a little bit of an indecision one the last week, but again with that gap up, strong price action there, pulling that 3 ATR line up to our initial entry point as well. So that now takes over. MyNet Phone, that was one from a few weeks ago that I think may have been stopped out in the portfolio. I think we got triggered in here. I'll have to go and check. We may still be in that one, because that one there, that candle coming down, breaching the initial soft stop, would have been converted to a hard stop, which I think is actually in the watch list. I remember updating that. So we've got a hard stop on that one, which is below our initial soft stop. So this can happen sometimes, and it just means that when you use a soft stop and you switch to a hard stop, that sometimes, depending on the way the trade goes, you can actually end up risking more on that trade than you initially planned to. So that's one of the downsides of using a soft stop. Obviously, the benefit is that we're giving the stock a second chance to perhaps move back up in the right direction. Okay, just a comment there from a couple of comments actually there. One from Ken. BLD has survived in my portfolio, so patience. So well, that's good, Ken. And John, PME, very, very few shares were available at the entry criteria. Yeah, it looked probably a little bit thin, particularly when you look at it on a daily chart. So I'd expect that to be true. Blackmores, one that triggered in a few weeks ago. Not the best looking candle to be triggered in on a pin bar. Came back down. What it actually did do was it breached our initial soft stop. So we had to at the same time, convert that to a hard stop, and you'll actually see, if I'll just try and make that a little bit bigger, there is a little fine red line below the black candle there, which represents our hard stop. So the hard stop there came in at 67.66, but at the end of that week it really didn't matter. We put in a really big bullish candle, nice following, nice week the previous week, and then last week performing pretty well at the same time. So Blackmore's doing quite nicely, and that's the bulk of the open ones in the Australian market at the moment. There was one stop out, and that was on REH. Let's go across now and have a look at the US portfolio. And again, hopefully some of you have been able to benefit from some of these trades along the way and just being patient. AYI, which is in the portfolio, I think 3 times through subsequent setups. And on all 3 setups, the trailing stop is in exactly the same direction. It's performed very, very strongly, and the price movement just continues to drag that 3 ATR up now. So even on the last position there, the 3 ATR not quite past break even, but certainly on all the prior positions well above break even and progressing really, really nicely. So hopefully some of you have got that in your portfolios. DOX had been going sideways a little bit last week. Quite a nice candle, getting up to the $62 level there. So again, just dragging that 3 ATR further beyond the initial stop as well. So that's now taking over. ANTM really just holding in there. Again, the last few weeks, despite a little bit of broader market weakness, has probably been, suffering a little bit. A little bit of hope in that last week's candle was white. The 3 ATR line now, remember, has surpassed our initial 2 ATR based stop, and as such, that now takes over. So that's ANTM. AWH. I had a price volume volatility signal go off last week. Now at this point in time, you're going to ignore that. There's basically there won't be any profit in this trade at the moment. So we're just waiting for that to have its rest. Hopefully it's had its rest and can turn around and start to move onwards and upwards. CBPO, the Star Wars character. You'll see that we did have this pin bar early on, and the pin bar actually moved well to the downward side. Nearly got to the initial 2 ATR stop. Since then has rebounded and moved up. Our trailing 3 ATR, remember, as soon as that comes up beyond our initial stop, that is now the stop that we defer to. So we now manage it using the 3 ATR. Since then, it's put in several reasonable candles. Looks like it's ready to move further to the upward side. So that'd be a good sign. 3 ATR just about at our entry level. Again, that's the best case scenario for us. Not too sure if any of you have been on this one, CYT. Hopefully you have, and Ken just says AYI has passed a major round number. Yes, it probably has. Nice result with this one here. You'll see. Hopefully you can see the trailing 3 ATR, massive candle last week, and again just being patient. Who would have thought that this was going to happen? But again, we're giving it plenty of room. It's had a retracement. Previous week really didn't look like we were going to get a candle like this, but again, you just don't know what the market's going to do. And really strong week last week, looking really good, and dragging at the same time that trailing 3 ATR up to $65, so well above entry levels. And going very nicely. So hopefully some of you managed to get part of that one. Unfortunately, DST, this was one from the previous weeks. It's still in the watch list. This was an example where you're trailing 3 ATR. Sometimes, because we have to wait for the candle close, it means that we're out at a much lower level. So that one there donating more to the market than potentially what you may have originally wanted to. If you were using a hard stop based on the 3 ATR, certainly getting out earlier and not suffering quite so much a drawdown. Skyworks, this is a stock that was performing very well for a period of time. Just recently lost a fair bit of its momentum. The trailing 3 ATR is now up at the original 2 ATR level. So just waiting for that one to regain its mojo and hopefully moving back up. That last candle, not as bullish as it could be, but it could have been worse than that one. CI, this is a stock that had been performing pretty well, keeping in mind you did have a price volume volatility signal go off. So certainly, based on your initial risk, taking a little bit of profit off the table at that level. In the event of price continuing to move to the downward side, even so, still ending up with a profitable trade. But if you did happen to take a little bit of profit at that level and then exiting at a further level down, you're just averaging the result of the 2 exits. That's CI. CRI, this was a stock that got pipped in. I think, let me just have a look. I just want to check on that one. On stop at 109.57. High there, 109.53. So this was one that didn't actually get triggered, which was fortunate because last week's candle pretty terrible and turning around. So that one there will certainly come out of the watch list because now it's even though if we go through and have a look at the peaks, there's a peak there of 109.30. And that one there was 109.53. So the setup last week, remember, we were going a couple of pips above that, 55 that should have been. We still didn't get to 55 the following week. And as such, we've now got poor price action. Not so much in the way of peaks, but if we think about the troughs now, we've got to have at the very least rising troughs. Wherever this trough finishes, it's going to be lower than the previous one. So again, the price action not the best on that. So that will come out of the watch list. EFX, it's taken a little while here, being triggered in a few weeks ago, only to go sideways. Promising the last few candles, good white bodies on those, particularly last week. And again, as a result, starting to drag that trailing 3 ATR up. That's on EFX. CE, that was a previous one from the previous week where we had price action that closed below its trailing 3 ATR. So that was one you would have noticed in the watch list from last week being triggered out. ACGL. I think from memory there's a couple of you that may well have this one. Again, just an unbelievable number of white candles. Obviously quite a significant candle last week. Didn't see a price volume volatility signal go off, but the good thing is this is just continuing to drag the trailing 3 ATR to the upward sign. So going well, that stock there. So is this one, ACN. Again, 3 ATR being dragged up well beyond initial entry level. Nice white candles of late, looking really good. AKAM, interesting one on here in that our 3 ATR is still below our initial 2 ATR. As such, that has been breached, so that 2 ATR will now be converted to a hard stop, 0.5% below the low of the candle that triggered that particular the stop there. AKAM. ALR, again, 3 ATRs come up above the 2 ATR, so the 3 ATR is the one that we respect and use for our trade management. It's been having a bit of a breather here, needs to turn around and start moving up. ALR. This is one from the previous week as well, in this one down here, where we had the black candle there, breached the initial 2 ATR based stop, and as such got converted to a hard stop, and that hard stop was at 115.58, and this last candle certainly going below that level, opening at around about the a little bit above the low of the previous candle, coming down, triggering that order, and ASH has now been stopped out as a result of that. One of the things that's it's worthwhile doing in analysis of the trades that have been going along is just have a bit of a look at the number of white candles and black candles in the lead up to the trade setup to see whether that provides any clue as to potential market conviction as well. Just recently, AYR at this particular point, we've still got our green 3 ATR line there. So it's managing, it's had a pullback, almost a 3 ATR pullback from its very highs here at $25. It's moved down as low as below $22, so it's nearly had a $3 pullback. Last week's candle, a nice big white candle versus the second last candle. So through a bit of candle addition, if we were to add these two candles together, we're going to end up with a fairly big type of pin bar. So hopefully that can now sort of slingshot that to the upward side for those of you who got that in your portfolio. BC just hanging in there for the time being, just really not going anywhere for the time being. It needs to start getting a little bit of a wriggle on. Certainly we've got some clear areas of support down here, so hopefully that can regather some momentum and move to the upward side. CF was a stop out this week. Again, price closing below its trailing 3 ATR on that one, so CF will now come out of the portfolio. It will remain highlighted as being stopped out in the watch list for 2 weeks. That's generally the mode. We like to keep them in there for 2 weeks before removing them from the watch list and putting them in the closed section. CSL moving up, didn't do much last week. Again, that 3 ATR line flat. Same with CTAS. Not a lot of strength in price action. As a result, our trailing stop is just biding its time. ENDP. Again, the benefit of a trailing stop, a rule that says when it closes below and prices started to move back up. So again, if you used a hard stop for your trailing 3 ATR, you would have been stopped out. We've given it every opportunity to move back up, and this is not untypical for the market to really push a stock heavily in one direction, and it needs to have a break. So depending on whereabouts you're getting in through that extended move to the upside, you can quite easily on occasions find yourself getting into trades at the very end of a strong move, only to experience a move in the counter direction as it's gone too far. It needs to regroup, coming back to again an equivalent type of level that the market doesn't bid stocks up on technicals, it bids stocks up on fundamentals. That price coming back to a level that the market's happy to start accumulating it again, and it's starting to move in the right direction for us. So again, just giving your stock every opportunity to do what it needs to do. FDS just going sideways, not a lot of conviction at the moment. Last week's candle at least dragging that 3 ATR up just ever so slightly. FedEx, this was an example of one that came out of the portfolio the previous week. Again, it moved 3 ATRs against us from 185 all the way back down. Last week's candle, as you would know, being stopped out, Murphy's Law, market turns around and says, okay, I like the price of it now. We gave it every opportunity. That's all we can do. GIII, going along really nicely. Not much happening of late, but trailing stop well clear of current price action, having a little bit of a rest. Nice candle last week, and if that can move to the upward side, it's not going to have to move too far, and it's going to start dragging that 3 ATR up as well. So a lot of the some of the stocks that we have been stopped out of over the last month in reviewing the portfolio, some of them we've been stopped out at the full the full 1R. A number of them, because we've been able to trail stops along the way, we've had less than full 1R losses, which is a good thing, given that a lot of these stocks in the portfolio are moving in the right direction. So again, it's a positive sign, and it's good for your overall trade management to be thinking about what your average loss is in relation to the average wins. And by being patient, you're going to allow those stocks that are moving in the right direction to make up for those stocks that if you manage well, you should also, with a little bit of luck, have hopefully less than 1R losses on those. HCC, I don't know if any of you have got this stock. Hopefully some of you have. Of recent, you'll see that it's got a very shallow trough in there. The volatility has really sort of come out of that at the moment. A little bit suspect about that action there. I think there's probably some takeover premium or something like that in that stock. Certainly massive up candle there. So hopefully if any of you have got that in your portfolio, that you're able to take maybe a little bit of that off the table just in case, given that it has moved so far. HQL, again, not really much happening last week. Certainly came down, tried to test the trailing 3 ATR, but market, bidding it back up, which is a good sign, positive sign. Interactive Brokers had moved very, very strongly. Price volume volatility signal went off, so certainly an opportunity for you. Should you feel that that's sufficient profit, going from around $35 up to $46, it's a fairly decent return in a pretty short space of time. So certainly taking half off the table at that level. If you happen to be stopped out with a close below your trailing 3 ATR, then you're going to split the difference on the trade, and you're still going to end up with more than likely a very favourable outcome as well. IHI, US Medical Devices, nice candles last week, dragging that trailing 3 ATR up. So again, reducing value at risk on the trade, and it shouldn't be too long before that trail comes up to beyond break even. ISBC is already above beyond break even. Not much happening in the last few weeks, really stagnating for the time being. Certainly would be nice to see that turn around and give us a little bit more strength. IWO, that's the Russell 2000 Growth ETF. Last few weeks really hasn't been doing much, and that's reflected in the trailing stop as well. Same with IYH, that's the healthcare. Again, this has been a very strongly moving ETF. Again, the trailing 3 ATR on this, just as an ETF, if you can imagine having a longer term hold in this and just looking at the price action, the opportunities even being, really ticking all the boxes and not taking any aggressive entries, just purely taking your simple price action, filter-based model that, lots of entries here. An example, around about $100, forget about the round number, and this thing is now at 163. So, that's in the space of about 2 years. So that's certainly, about 30% a year. And you really didn't have to do too much at all. Did it close below its trailing 3 ATR? Let's go and have a look. The close there, 117.03, and there's our ATR, 116. So it didn't close below there. Another one there where it looked like it got close, 128.75, and our trailing stop, 128.47. So again, giving your stocks or your ETFs lots of room to move. Jarden Corporation dragging that trailing stop up. Would have been nice to see a little bit bigger body on that candle. Last couple of weeks on this one, a pin bar followed by a small bodied white candle, still dragging that trailing 3 ATR up. That's on Lennox International, moving in the right direction. MANH, nothing doing last week, previous week being a really strong candle. MATX really hasn't been doing too much of late. At least it did put in a white candle last week, so hopefully that's a sign of things to come, and it can start to move back up again. Interesting to see old levels, how the stocks react when they get down to them, whether they start showing any signs of tails on the bottom to suggest that there's some demand down there or not. MCK coming back towards its trailing stop at this point. Still got a little bit of room there before it closes below. If you used your 3 ATR as a hard stop, then you would have been stopped out last week on that one. Whichever way you choose to manage your stops, just make sure you stick with it. Otherwise you drive yourself crazy thinking that you should have had a soft stop, only to realise that it would have been better if you had a hard stop, and vice versa. So trading's all about being consistent and hopefully through showing you some of these and the conversions that we've had to do from soft stops into hard stops, some trades being stopped out, some escaping and turning around to go on to become good trades in the longer run as well, is just helping you to build up the mindset of just being patient and allowing the market do what it needs to do. McGraw-Hill financials. This is one where currently the protective stop has been breached, and this is one where the now needs to have a soft stop converted to a hard stop. Next one on the list, and again that'll be reflected in the watch list. MKTX, which I think we may have already had a look at. Sometimes these appear twice in my Beyond Charts watch list. Morgan Stanley, not much happening of late. Again, trailing 3 ATR. MSCI, moving up very, very nicely. Again, nice big white candles. And I think we might do one more. Lucky last. If Beyond Charts takes us there, O'Reilly Automotive. So again, moving up and continuing in its upward direction. Last candle, not sufficiently strong enough to drag that trailing 3 ATR up, but moving nicely. And as you can see, as a result, we've got lots of space between our protective stops, which is a good thing. Folks, that we've gone about 50 odd minutes, given that I think we've gone for a while, given that no real depth of setups this particular week. I just think it's worthwhile every now and then revisiting the portfolio to see what's happening, to give you a bit of an insight into some of the stocks that you may or may not be in, or may have wished you were in but weren't, or vice versa. So has anyone got any questions, any Q&A per se? Just a reminder, while waiting for that the video for the ETF Maximizer, we should be able to send out a link to that sometime this morning, so keep an eye out for that. All right. Thanks, Kim. Kim's just made a comment. Good to hear your take on the charts and price action. See you next week. Fantastic. Right, folks, if no questions or anything like that, then there will be an education session this week. There will be an email in your inboxes later on today with the first 2 selections from the ETF-based strategy. So please, before you take any action on that, make sure you watch the recording, which we will send out. It'll have instructions on how the ETF strategy came to be, the mechanics behind it. So, yeah, keep an eye out for that, and the email regarding it in your inbox later on today. And so we will catch up with you, if not at the education session, then certainly next Monday morning at 9 a.m. Bye for now.